Welcome to Second Take, the show that focuses on the issues behind the news. South Africa's third largest gold producer, Harmony Gold Mining, believes that the price of gold could reach $1,500 an ounce by the end of the year. Mining Weekly editor Martin Creamer is in the studio to discuss the future of the gold price. Welcome, Martin.
Thanks, Shannon.
Can you tell us why gold is the place to be at the moment?
Yeah, well, gold is a bit of a foul weather friend. When things are bad in the world, the gold price goes up, and we see it consistently going up. For the last 10 consecutive years, we've seen an increase in the gold price. And of course, you know, South Africa is synonymous with gold. Although we are the fourth biggest producer at the moment, we still are noted for our gold production. So it does us good. But we also got to take into account the strong rand at the moment. The rand is quite rampant. So you gain, but you also don't gain as much as you think, because the gold price in rands it doesn't rise as attractively as the gold price in dollars.
Now, do you agree with Harmony Gold CEO Graham Briggs, who says that the gold price could reach $1,500 an ounce?
Well, it's interesting that he says before the end of the year it might reach $1,500 an ounce, and it shows you how quickly sentiment is gaining momentum about gold. Because, I mean, it was only last month that Dr. Mark Bristow, who's normally on the button with gold, said that you know, he doesn't think it would be out of line to predict that gold will be at $1,500 an ounce at the end of 2011. Now, what we're hearing now is that before the end of this year, we could be at $1,500 an ounce, whereas most people are saying perhaps we would be at $1,300 an ounce. So you can see how the momentum is gathering, and the gold bulls are rampant.
What do you think is driving the gold price to such extremes? Well,
it's again this uncertainty within the global economy. People are complaining that this global recovery is fragile, and there's still unemployment in the United States, which is causing concern. I think that we shouldn't have a double dip. I mean, that fear of a double dip has probably passed in most circles, but there's still no conviction that the world is really out of trouble from an economic point of view. And this tends to keep pushing the gold price upward.
Now, what has the gold price done for silver futures?
Yeah, that's its fellow traveller, silver. Not so much in South Africa. In South America, you know, you go to a gold mine in South America and they start telling you about the silver first. In South Africa, it's a little bit different. The quantities are not that great, but still, it's a fellow traveller. And you can see that it's even increased since the beginning of the year at a greater percentage. I think up 24% at last count that I saw, whereas gold was up 17% since the beginning of the year. So it's but at a different price level, you know, around about the $20 per ounce. So it's in a different league. But a lot of people are, you know, also investing in silver as a safe haven.
So it would seem if you can't afford gold, we'll just go for silver.
That's right.
Thank you, Martin.
Great, Shannon. Thanks.
That's the show for today. Join us again next time for more news and insight into what's happening in the mining world.